Good morning. It's great to be here, and I'm afraid I'm going to do this in English because trust me, it's going to be better than if I really try to work my French this morning. Although I lived in France for 7 years, it'll hopefully be better for you. I was asked to speak about the new economic powerhouse IT companies, and what I'm going to do in the next 20-25 minutes is to give you what I hope will be a pair of glasses for looking at entrepreneur country. Now, Entrepreneur Country is both, if you go to entrepreneurcountry.com, it's one of our businesses at Ariadne Capital, but more importantly, it's where entrepreneurs go every day. And for those of you who are entrepreneurs out there in the market, you'll understand entrepreneurs feel that they go to a different country every day, and nobody can quite understand the levels of stress and what it takes to drive that train of entrepreneurship. I also have a book that's going to be published called Welcome to Entrepreneur Country, because over the past 3 or 4 years, I came to realize that we're going through a structural change, and it's not just that the entrepreneurs go to a different country every day, but frankly, all of us are. As was mentioned just in the last session, all industries are changing. They're all becoming based on digital business models and software. So I'm going to give you just my view on that by telling you a little bit about the messenger, me, because the message is always wrapped up in the messenger, taking you through a day in entrepreneur country, some key thinkers who are framing this next age, what I believe is the next industrial model, ecosystem economics is what we refer to it at Ariadne Capital, how to build a global leader, and then some predictions for the financing of entrepreneurship. So Ariadne Capital is my firm, and just very quickly, over the past decade, we've spotted some trends and backed some important entrepreneurs. Some of them are listed here, and I'm going to tell you a little bit more about Monetize in just a moment, because it's a key company for you to really understand. In my view, if we look back throughout history, capital has always followed ideas. And I remember being in Paris at age 21 years old, having just graduated from university, and I was very focused on how was I going to break through and get into the IT and the technology industry. And I remember my friend at the time said, stop focusing on the money, because everything seemed to me when you're 21 years old and you're starting out on your career, how do I get to the money? How do I break through? And he said, if you're really good at what you do and if you're able to communicate and execute your unfair advantage, the money will find you. And I remember thinking that was the most ridiculous thing I had ever heard. And the past 20, 25 years have shown me how true that is. We see entrepreneurs at Ariadne Capital, more than 100 every month, who are obsessed with finding the capital. But the ones that break through are the ones that are not worried about the money and are worried about communicating their vision to the market. And if we look all the way back in history, whether it's to Leonardo da Vinci or Michelangelo or Christopher Columbus, capital has followed ideas always. It always has and it always will. So the financiers of the day have always backed the industrialists of the day. And finance and technology, in my view, are both tools for industrials to create high-growth companies. I think of them less as industries and more as the vehicles for companies to become high-growth. And in my opinion as well, what's gone wrong with the financial services industry is that it thinks of itself as an industry rather than a support industry or service industry to industry. So who are the new industrialists in the digital age? Now, whether you find your business partners in a garage in Palo Alto or in business school in France, as I did, or in in the military, however you find that group of guys that you decide to build your IT business with, what entrepreneurs do is they focus on that blue ocean. And it's really quite important for you if you're trying to engage with an entrepreneur-led startup, a technology firm, is that they don't see the competition. In fact, for the venture capital community, this is what we always say, is that how many times have we heard entrepreneurs say, well, there is no competition in our market? It's because they're singularly focused on making the big step forward, on driving into the blue ocean. And that's very useful. If you can get an entrepreneur, if you can acquire and partner with entrepreneurs into your company, they can move faster because they reduce They refuse to see things as problems, and they leapfrog those opportunities. So both sides see entrepreneurship as a game of asymmetrical warfare. Both the Davids with their slingshot that are trying to break through, but also the Goliath enterprises. Both sides think that they have the advantage, and we'll see how that plays out. That's the face of every entrepreneur. And it's important that you think about that, because whether or not they show you that, that's the face that drives them forward. And what I said earlier about entrepreneur country is this place that I think all of society is going to, where breakthrough moments triumph over near-death experiences. So entrepreneurs, when they grab hold of something, in their mind's eye, they're already seeing that prize, and they're working very, very strongly towards that. Now, the global entrepreneurship model has changed over the past 12 years. The financing of entrepreneurship had to change as a result. Companies are being created which are fast, flexible, distributed, and most of all, cheap to start. And I'm going to take you through the 5 stages of company development in just a couple of minutes. The product iteration is key, depends on social interaction and real-time customer feedback. And most importantly, technology has become standardized and componentized. It's through the cloud rather than down the street. So how will digital ideas shape our lives over the next 10 years? I wanted to share with you some key thoughts that I think are quite fundamental to viewing this next age that we're moving into. First of all, the consumerization of technology, I'm sure, is very obvious to most of us in the room. I mean, we first saw that when we were advising Skype in 2003 and 4. It used to be, 20 years ago, your experience of technology would first be in the office, whatever, laptop, computer, and so forth, and eventually you might experience it in the home. That, of course, has completely changed over the past 10 years. We forget how quickly it's been really over the past 10 years that has changed. We experience technology as individuals first and bring that into the office environment. Why that's important is that it completely changes how you take products and services to market, completely. And I would argue that all business-to-business propositions are ultimately always B2C to B, not B2B, but B2C to B always. If you look at any company which has successfully taken off a new product or service, it's because they're able to demonstrate the consumer demand and then march that back into the channel, and that's the way they get their leverage. This was originally a quote from the founder of the Grameen phone, Iqbal Qadir, and he said, quote, "Capitalism was about empowered authority, which didn't necessarily activate the citizenry. The internet stands that on its head and shifts the power to the individual, making individual capitalism the force of the 21st century." And what does that mean? I think it's difficult to find somebody under 30 years old today who thinks they work for someone. And I put in that category the people under 30 who work at Ariadne. This group of digital natives coming through that are in their 20s think of themselves completely different as their own profit and loss, as their own brand, and they're thinking about the businesses that they want to set up, and even if they're part of a broader team or a company, they think of themselves as an individual capitalist. And that unit of trade, of trading, has really shifted from the company, from the corporate, to the individual, again having massive implications for how we engage and take products and services to market. Clay Shirky wrote a book called The Cognitive Surplus, and he gets at the problem by saying, where did we come up with those 100 million hours that it took to build Wikipedia? And I think it's even more that's estimated at this point. It turns out we're watching a lot less TV. He talks about the great spare time revolution. Nothing is just a broadcast. Everything is two-way communication. The figures on YouTube and some of the other YouTubes in the world are staggering, in fact, in terms of how much of human existence is being cataloged through video every single day. But if there's one kind of core fundamental I'd like you to take away from this talk this morning, is that there's a fundamental network orientation to all of business, and frankly to all of life. If you're still thinking linear or hierarchical in any way, in your business life, I'd really encourage you to update your thinking to the network that you're participating in. And this is much more profound than just the fact that Facebook is about to go public. There's a network orientation to all of business, and the winners are the people who understand that and are able to drive the economics through that. Raymond Kurzweil's book, The Singularity is Near, talks about how technology is operating exponentially while our minds operate linearly, back to the network effects through technology. It took 89 years for the fixed-line telephone to achieve an adoption of 150 million users, but only 38 years for the television to get to the same point. The mobile phone achieved this in 14 years, the iPod in 7, Facebook in 5, and you can see where this is going. So there will be, according to Kurzweil, 20,000 years of progress this century. At this point, at a certain point, we have to leverage technology just to continue to model or predict the future. So what that tells me is that if we want to stay ahead of the train, we have to build the models for not only the human engagement, the human side of it, but the business models, the economics of how that's going to work. But finally, and this is the last thinker that I want to share with you, Carlota Perez is a Venezuelan economist. She's based at Cambridge University, and her thinking has undergirded a lot of our thinking at Ariadne Capital in terms of our investment thesis and the way that we view the markets. She has a theory of technological disruption and adoption. She's looked at the past couple hundred years and says every 60 years or so, there's a moment of technological disruption. Now, we all lived through one in the 1990s, the commercial internet. But you can go all the way back to the printing press and look at the effect of the printing press or the semiconductor. Every 60 years, there's a moment of disruptive technology. The important thing is that, and if we look at the late 1990s, this is when I'd just come up to London from Paris. Excuse me. I just moved from Paris to London. I was running a network of entrepreneurs called First Tuesday, which was across Europe, helping internet entrepreneurs expand their business. It felt like every internet entrepreneur was a revolutionary. He or she with his slingshot was trying to kill the establishment. And it was David against Goliath, and again, both sides thought they had an advantage. The important thing about the IT world today is that David and Goliath have to collaborate. This is not a moment of disruptive technology. As Carlota Perez describes, and as we very much believe, the social and economic institutions have pulled that disruptive technology of the web into our lives so that we don't even think about it anymore, do we? And if we think back to from 99 to 2012, have any of us stopped using broadband or mobile technologies? Quite the contrary, they just continue to seep in to absolutely everything that we do. So what that means is that David, the startup, the small, fast-growing business that understands digital business models and is creating the new digital world, and Goliath, the established enterprise in whatever industry, have to dance. They have to collaborate to create high-growth businesses, and more about that in a moment. So we think that there's 5 stages of company development. The first, the concept stage, is what I call the dinner party stage. On Saturday night dinner parties, everybody talks about the idea that they have for a business that they're going to set up. And in 95% of the cases, nobody does anything about it. So a lot of people have ideas. But the good news is that you can get a new product and service up and running, phase 2, for a small amount of money today. Getting into the game, the barriers of entry to getting a beta, to get some traction, to test whether or not your consumer insight into consumer behavior is accurate, doesn't cost a lot of money. There's kids that do this for £500 and a pizza, but surely not a couple million to get it up and running. And the challenge, if you're a corporate that is trying to innovate in terms of new applications, is to realize how cheap you should be doing that. So the second phase is about getting a product which embodies a consumer internet insight. The third phase, though, is how do you tax that consumer insight? And you have to separate it out, because you could have a correct insight into consumer behavior, but you could put the wrong business model around it. Now, we get involved between phases 2 and phase 3. That's where Ariadne Capital is comfortable, is helping companies go through that journey. The interesting thing, though, and this is where it's really changed and will continue to change, and why large corporates, no matter what industry they're in, have a huge opportunity in the innovation world right now, is because phase 4 is about how you scale your business. And no venture capitalist is going to give you 50 million euros to acquire 50 million customers to scale across Europe or the world. You're going to have to do that on the back of partnerships with banks and retailers and telecoms companies. With the new platforms that are out there, those are the companies that will provide the distribution, the audience, the reach, and enable companies to scale. And phase 5 is really, I put exit, but it's really about sustainability. How does a company, how does David, as he's building his business, get to the point where he's cash flow positive, or that he goes public, or that he gets acquired? It's not really until phase 5 that the entrepreneur can kind of exhale, right? So those are the 5 stages of company growth. Now, at anywhere along the way, there's all sorts of near-death experiences. And when a company, let's just take LinkedIn, everybody was surprised when it went public for billions and so forth. But when you think of the journey, and I think Reid Hoffman, the founder of LinkedIn, has been pretty open and honest about the near-death experiences in building what most people would consider a success, understood the network orientation to business, the consumer insight that people want to post that they're open for opportunities, even if they're not necessarily looking for a job. Consumer insight was correct. Business model, tick, was able to scale. At any point, retail, recruitment firms, media companies could have acquired LinkedIn, but they didn't. So when it gets all the way through to phase 5, there is a premium associated with the company. We see these kinds of David and Goliath collaborations all over the market. I've just put 2 companies here that over the past couple of years have provided distribution in exchange for working with the digital enabler, the David, but there's hundreds of these deals being done by smart corporates and Goliaths constantly. So I never forget that innovation is really about economics, not technology. Otherwise, we'd all be flying the Concorde. We're not, we're packed into jumbo jets. It's really about the economics, and this is a moment of disruptive economics. So what I would put to you is that ecosystem economics is the new industrial model. The companies who understand their role in the ecosystem, whether or not that's healthcare, financial technology, retail, mobile money, broadcast media, any of the new ecosystems which are emerging, the companies who understand their role and are able to organize the business model for the ecosystem will win. Technology is not the point, business model is the game changer. And if we think about Apple, everybody focuses on the beautiful products, and it's true. I love Apple products. The real opportunity that Jobs seized was to change the economics of mobile telecoms and music, 2 industries where the Goliaths who were trying to impose economics were not thinking about the multiple stakeholders involved, were not cutting in multiple parties in the deal. We think about Google for just a moment. Google says that they organize the world's information. They actually organize the economics of the world's information. And I and you, as a consumer of their search, am not given any upside in the search transaction. It's quite extraordinary if you think about it. Nobody jumps up and down, but the point is just they've built a multi-billion-pound business using, albeit anonymously, my personal data, aggregated with yours, and releasing none of the economic value to us. Their biggest Achilles heel is if someone else in the search space were to cut a different set of economics for the consumer. And I found that entrepreneur. His name is John Paleomolites. He built a business called Beat That Quote in financial services price comparison, which was doing cashback deals, simply giving an economic value for the use of data. And that threatened the business model of Google so significantly that they bought that business last March 2011 for 122 times EBITDA multiple. Now, why would Google acquire business at that kind of multiple unless it touched the core fundamental of their business model challenge? So the economic value of your data is one of the key battlegrounds, and this is what David really gets, and this is the challenge to Goliath, is that all businesses will be built around consumer data, and will be leveraging that to build new products and services. So how do you launch a global business? Very simple. Whether you're David or Goliath, you need to make it in the interest of your natural allies to succeed. People don't do the natural allies test. They don't do the natural allies exercise. They think, I've got to do it on my own. I need a lot of money. Where's the money? I'm just going to press ahead. I'll work 24 hours a day. There are always natural allies. Sometimes they're in adjacent industries. Sometimes they're companies that have lost their way. Sometimes they're businesses that are used to be competitors of yours. There's always people in the market in whose interest it is for you to be successful. And the opportunity and the challenge is to reach out for them and to create an incentive, whether it's economic or otherwise, for them to help you be successful. Has anybody heard of Monetize? A couple of hands in the audience. Monetize is a company that Ariadne has been working with since 2004. They're worth $500 million today. The entrepreneur, Alistair Lukey, said at the very beginning, all I have to do is to get the top 4 banks and the top 4 mobile carriers to adopt my platform and we'll be okay. He's done that over the past 7 or 8 years. They basically provide a platform into the banks. They service 250 financial institutions, bringing them into the world of mobile money. Not disrupting them, enabling Goliath, the bank, to get into the new ecosystem of mobile money, right? Who loses? Western Union, who rips off poor people, charging them a fortune to send money around the world, helping banks to create new digital revenues, but importantly, creating a set of economics between operators, banks, myself, getting a lower cost of capital, and Monetize, of course, sitting right at the heart of that, just taking a cut of every single transaction that goes through the system. Every 20 seconds, somewhere in the world, someone is using a Monetize service. Visa have backed them 5 times, and they're operating on 4 continents. With ecosystem economics, organizing the business model for that new ecosystem, they've developed a global footprint in 8 years. This David and Goliath grid shows you the opportunity between David on the left, Goliath. Both of them are required to build high-growth businesses. Some Goliaths, some really, really special companies, can find David's internally and innovate. David understands that ecosystem economics. He understands consumer data. He gets that network orientation. But at the beginning, he's hugely vulnerable, because in a world of networks, multiple stakeholders, he's hugely vulnerable. The best opportunity he can have is to bring strategic value, top left, to Goliath. This is a situation of beat that quote to Google, 122-time EBITDA multiple. When David partners with Goliath, he brings new digital revenues, like Monetize brings to the banks. He brings a lean operating model, cloud model, operating model, renting, not licensing. But when acquired, those digital enablers can become the operating system to the industry, can become the central operating system to these new digital ecosystems. So a company that starts off in a hugely vulnerable position, at some point as they're shifting across diagonally to the upper right, becomes a triggering point where it flips and they start to have profound network effects as they get locked in to the emerging ecosystem, as Monetize has done over the past 2 years, where at this point, for a bank not to adopt the Monetize platform means it's not participating in the interoperable world of mobile money. Banks that don't have that lock-in to that interoperability are forcing their customers to work outside of the network. So I'd argue that that David and Goliath grid is one set of glasses for looking at the opportunity today. So what we look for is audacious plans, conviction, humility. Another one of my favorite expressions was Alistair Lukey's, the CEO of Monetize. He said, quote, "You can't build an ecosystem without humility. If you're dependent on people adopting your platform in a network-oriented world, you've got to be humble. This is not about telling people what to do. It's about making it in their interest for them to want to help you and to incentivize them to pull you in the market." So I say it's really very simple. Follow the entrepreneur. He or she has the market insight. He or she is the creator of value. He or she is the hero. And the venture capitalist, the financier's job is to find the entrepreneurs and to follow them and to help them create the value. The corporates also provide the highway, the distribution, the audience, the ability to scale. As a final point, I just want to leave this quote with you, the entrepreneur's entrepreneur. "Here's to the crazy ones, the misfits, the rebels, the troublemakers, the round pegs and the square holes, the ones who see things differently. They're not fond of rules and they have no respect for the status quo. You can quote them, disagree with them, glorify or vilify them. About the only thing you can't do is ignore them, because they change things. They push the human race forward, and while some may see them as the crazy ones, we see genius, because the people who are crazy enough to think they can change the world are the ones who do." Thank you so much for your attention this morning. I hope that was helpful and useful, and have a very good conference. Thank you.